Hello and welcome to this week's Australian Share Market Report. I'm Dale Gillam, Chief Analyst at Wealth Within. This week I'll be discussing Warren Buffett's approach to investing, the All Ordinaries Index and the Australian dollar. Now before we jump into the report, I'd just like to mention if you have any thoughts on investing, please comment below and subscribe to our channel to keep up to date with our new content. So let's get into this week's report. Okay, let's get into number 5. Invest in companies and industries that you understand. Warren Buffett says that many people think quite a bit before making any investments. And sometimes they think too much. This is where paralysis of analysis can become an issue that impedes your success. Buffett cautions that you should never invest in a business that you do not fully understand. He says that before he invests in the stock of a company, he has to first understand how the company makes money and the main drivers that impact its industry. If he's not able to understand this in 10 minutes, he moves on to evaluate another company on this basis. Now you can't really fault that thinking, can you? Most people cannot predict the next fashion trend among teenagers or whether or not a medicine will be successful in the market. Even if you had more data than anyone else, it's still impossible to predict the future with 100% accuracy. In situations that rely on accurate forecasts of the future, Buffett advises not to invest. If it's complex for you, just look for other businesses to invest in. Now, when I'm teaching traders, one of my mantras is to keep things simple. And I think this is what Buffett is saying here. All too often, I find investors and traders in markets or positions that they do not understand, and this causes emotional decision making and poor returns. I also have to agree with Buffett that if no companies on your list fit your investment criteria, stay in cash because cash really is a position. Number 6, buying a stock of a company is buying part of a business. Imagine you're buying an ownership stake in a convenience store around the corner from your house. Now, automatically, you will think about the competition, suppliers, prices, etc. You'll have to think about both the specific location as well as its competitive position in the marketplace. Similarly, when buying stocks, you need to think about all of these things, just as the people running the business do. When you buy a stock, you are not just buying a piece of paper or a ticker symbol. You are buying the stock of a company and it's buying ownership stake in that business. I think many people forget about this and often they do not think of stocks they own as assets in the same way they think of real estate. They often treat the market and the buying and selling of stocks more like a place to gamble. We saw this in the tech and other booms where the masses invested in things that had little or no intrinsic value or profits. Number 7 is managing your risk. Now this is my favourite area to talk about with traders, as I find the majority, whilst they intellectually give the impression that they know, they really do not understand it. Buffett's rule number 1 is never lose money. His rule number 2, never forget rule number 1. Buffett's other famous quote, risk comes from not knowing what you're doing. Here, I would suggest 90% of traders and a large percentage of investors do not heed this sage advice. Buffett suggests that when a company no longer matches your reasons for buying, sell the stock. If you determine it needs to be above its 2-year average stock price and falls beneath it, then you should sell. This is what most Buffett followers miss. He has rules and he diligently follows them. When a company no longer fits his criteria, he sells. Resist the urge to make excuses to stay in the investment. Sell it, period. Here I totally agree with him. I teach traders to position trade, and this means buy low as Buffett teaches us, and then to hold the position until risk of holding that position becomes too high. Again, whilst we might go at the exercise a different way, both Buffett and I agree on the buy low and sell high principle. Number 8 is learn from your mistakes and move on. Now you might be astonished to know that even Warren Buffett makes mistakes, and big ones too, but he makes sure that he learns from his mistakes. Buffett also advises keeping a record of the mistakes you have made so that you know what went wrong and make sure you do not repeat them again. Documenting your mistakes is a way of you taking responsibility for them, as all too often we sweep mistakes under the carpet in an attempt to hide it as if it never occurred, and this then breeds a false reality. Being disciplined and accountable are both traits of excellent traders. Buffett further says that you should share these lessons with your children and grandchildren so that they know what mistakes not to commit. Now, I really thank him for not only sharing his lessons with his family, but with the world. What I think is sad is that whilst his words of wisdom are excellent and highly valuable, the majority either do not listen or do the opposite, and this is a tragedy. Now, I do hope you've enjoyed this series on Buffett's words of wisdom. Now, whether your desire is to be a good investor or trader, you would be wise to follow his wisdom. Alrighty, just before we get into the charts, I just wanted to thank some of the people that have been making comments on these YouTube videos. It's great to see you doing that. If you have a question, make sure you do put a comment on below on the videos and ask me a question. Also, if you've got a stock that you want me to have a look at that you might be interested in, I'm also happy to bring them up every week. If you've got some comments, please do so. I got one from Sharon. She says, "Thanks, Dale. You're always thought-provoking and give away little gems of information." Thanks, Sharon. That's really good. We got another one from a guy called Casual Chill Boy 5 days ago. He said, "Dale, the advice you give out are so good. Although it may seem trivial on a surface level, it is these fundamental principles that Buffett made him a successful investor." Now, to me, that's really critical. Often people say to me, "Hey, that's really great, insightful information that you've got." And thanks for saying those sorts of things. And to me, I learned from the masters around the world. Some of these people that I learned from, they were trading the markets over 100 years ago. And to me, there's one thing that doesn't matter whether we get computers or how good technology gets. The fundamental principles of investing and or trading don't change. And Buffett is the Oracle of Omaha for a reason, and he does put out a lot of great information. Quite interesting to me. I have never read a book on Buffett and his principles. I'm more of a technical trader, but a lot of the principles that I've got and I've developed over the years are very similar to his, so it's quite interesting from that point of view. So thanks very much for your comments. I got another one from Marvin, and he said, "Thanks, Dale, you are the best, as we should invest first in ourselves before trying the share market from tips from friends. Most of all, people lose a lot of money in the market from this method, just as I did. If we all shared with ourselves learning the correct way first, that would be great investing straight from the start. I hope your message reaches out to all the beginners like we all were. We all would be much further ahead. Keep up the super extraordinary, fantastic work, and I know it's only going to get better." Thanks, Marvin, for that nice work. The nice words that you've given me. Now, let's get into this week's stock. Okay, looking at the All Ordinaries Index, as you can see on the screen right now, we do have a weekly chart of the All Ordinaries Index. It's the same chart I've been bringing up every week, but interesting thing for me, looking at this or last week's bar, if I just drag it out, you can see it's the week ending Friday, the 1st of June, or the 1st of June, that bar. You can see here how it opened at 61.40. It had a low of 6,072 and came back at closed a bit higher at 6,104. Interesting thing for me is if I look at that bar, and if you can see that bar properly, you can see where it opened on its high, traded right down into that area where I thought it would do, that 38.2% retracement, and it's come back up to close about halfway on the bar. That's a critical point for me. That says that this week has a probability of going up, and then this could be the low that I've been looking for. Now, I am prepared for the market to fall away again this week, right down to that 6,038 point level, but I think we may see an upward move this week. If it breaks through that 6,141 point high of last week's bar, then we'll get a green up bar, and then it should keep going. Now, I would be expecting 4, 6, 7, 8 weeks to go through that previous high of 6,244. I would expect that to happen over the coming month. And we're going to get some good buys coming on our market. Now, the banks have been really sort of ordinary shares to own. All 4 banks had their highs, most recent highs, back in 2015, March and April, and they've been relatively falling since then. So let's have a look at a different sector. I'm going to be looking at materials. I'm going to bring up BHP first, and you can see here on the left, looking at the monthly bar chart of BHP. I mean, look how bullish this stock is. Going back to January 2016, it's done very, very nicely and trading well and truly up at this point in time. Looking at the weekly chart, I don't see any reason why BHP wouldn't continue to rise. Last week, if I look at last week's bar, I'll bring up the weekly chart for you. You can see it. Last week's bar gap right down. Now, BHP can do this. You can see some little gaps between opens and closes. Opens and closes, if I can get my mouth to work properly. It does that because it's traded on multiple exchanges, this stock, so it does gap around a little bit. That said, it's a sensational stock to own when it's running. This is a nice bullish sign. It gapped right down and came right back for the week. So I think BHP is looking good and further rises will come. Let's go to Rio. Rio is a little bit like BHP. Generally, BHP and Rio tend to look fairly similar. So if BHP is rising, so is Rio. And again, you can see the same, almost the same sort of run since 2016. Now let's bring up its weekly chart so you can have a quick look at that one. And looking again, you can see gaps on the Rio chart, just like BHP. Interestingly though, this week's or last week's bar, you saw a gap down, not as big as BHP because BHP tends to get a little bit more volume than Rio does. Rio is still closing at the moment. For last week, it closed at 82.50. Again, I still think this is a nice bullish sign. If it starts to move up, I think could be a good opportunity for Rio. I'm going to look at Fortescue now. Fortescue is a little bit different. If you look at the chart now of Fortescue, you can see it's completely different than the BHP and Rio chart. And a lot of people think, well, let's get onto Fortescue. And I know there's a few people say to us, why are you talking about Fortescue? It's been down, and you can see the recent high that it had February 2017. So it's well over 12 months it's been falling away. But that's what I look for as a trader. I'm looking to get in low and sell out high, not get in high and hopefully it goes higher again. So I'm looking for stocks that are falling away, and you can see this beautiful pattern that's fallen away on. So to me, Fortescue, whilst it's not a buy now, it is on my watch list of stocks at this point in time. And you can see how it's moved down into that 50% of that range, or 50% retracement of that range between $1.44 and $7.27. So it is looking quite good. Let's just quickly bring up the weekly chart, and you can see here how like the other two, it did gap down a little bit, but this one took off straight away. So I'd be looking at this stock to really break above that sort of $5 mark before I look to get into it. But right now, it's looking really, really nice. I want to look at another one, Newcrest Mining, before I finish up. Again, you can see a similar pattern than you can on Fortescue. It had its low, Newcrest had its low in December 2013, as you can see here. It's making an interesting pattern, and what I mean by that is markets unfold in price, time, and pattern. And if most people that tell me they're traders use price alone and maybe some support and resistance, which is still price-based analysis anyway. And if you've got somebody who knows price, pattern, and time, they're going to take your money every single time. And that's what I find a lot of people who call themselves traders on a scale of 1 to 10, 10 being me as a great trader, 1 being you're not trading at all. Most people, their level of knowledge and skill about trading is somewhere around 2. It's rare for me to meet anybody that's above a level 7 unless they've done our courses, but most people are around 1 or 2. What they're not seeing is these patterns here, and if I look at this pattern, I've just scrunched that up and I shouldn't have. Let me have a look at that. So if you see this pattern, it sort of looks like a triangle. So if I draw a little move, if I get my trend line tool on there, I get my trend line tool, it looks like a little bit of a triangle. This is just a consolidation type of pattern, and it's either consolidation or distribution. Now to me, this is, at this point in time, there's a lot more into it than I'm going to explain here, but this looks like a bullish signal to me. So when I start seeing price break above this sort of $22, $23 mark in that sort of area, then I'd be looking quite heavily at Newcrest or something that I might like to purchase. So hope you've enjoyed this week's stock report. As I said earlier, if you want me to look at a stock that you own or may be interested in, please make some comments below. If you've got questions for me, again, please comment below. I'm always happy to answer questions. But good luck, good trading. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on Soundcloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.